Welcome everyone to the channel. I'm really glad you're here. Today we're going to do something that many people ask for all the time, which is a live trading session on synthetic indices using a real account. Everything you are going to see in this video is happening live, and throughout this session, I'll explain my reasoning, my analysis, and the decisions I make while observing the market. The goal of this video is not only to show trades, but also to help you understand how a disciplined trader approaches the market using technical analysis and price action. So, if you are interested in trading, if you want to improve your analysis, or if you are trying to become more consistent in the financial markets, you are definitely in the right place. During this session, we're going to talk about several important concepts such as break and retest, market structure, patience, discipline, technical analysis without indicators, and the mindset that traders need in order to survive in the market long term. I will also explain why around 95% of traders lose money in the financial markets, and what the small group of traders who succeed do differently in order to become part of the 5% that manage to stay profitable over time. Before we begin the analysis, if you enjoy this type of content and you want to receive alerts whenever I take profitable trades during the week, you can also check the link in the description and join our VIP group. Inside that group, I share my trade setups and explain the reasoning behind each entry so members can follow the analysis in real time. On average, there are at least 6 alerts per week, and many traders find it very helpful to see how a structured approach to the market works in practice. Now, let's start looking at the chart and see what the market is doing right now. The first thing I always do when I open the charts is simply observe. I don't rush into trades and I don't try to force an opportunity. One of the biggest mistakes beginners make is opening the chart and immediately trying to find a trade. They feel like they need to be in the market all the time, and that mindset usually leads to unnecessary losses. Professional traders do the opposite. They take their time to understand the market structure, identify key levels of support and resistance, and observe how price behaves around those levels. Right now, what we are seeing in the market is a movement that created a clear level of interest. Price moved strongly in one direction, and after that movement, the market started slowing down. When the market slows down after a strong move, that usually means it is approaching an area where buyers and sellers are deciding what will happen next. This is where many opportunities begin to appear, but it is also where patience becomes extremely important. One of the concepts I use very frequently in my analysis is something called break and retest. This is one of the most reliable patterns in technical analysis and has been used by traders for decades. The idea behind break and retest is simple. First, the market breaks an important level of support or resistance. After that break happens, the price often comes back to test that same level again. If that level holds during the retest, the market often continues moving in the direction of the original break. This concept is powerful because it reflects the way buyers and sellers interact in the market. When a resistance level is broken, for example, many traders who were previously selling may start buying instead. At the same time, traders who missed the initial move may wait for the price to return to that level so they can enter the trade with a better position. That combination of new buyers and market structure often creates the continuation of the trend. However, there is an important detail here. Many traders see the break and immediately enter the trade. They get excited and they jump into the market too early. But very often, the market returns to retest the level before continuing the movement. Traders who enter too early often get caught in that retest and end up closing their trades at a loss. That is why patience is such an important skill in trading. Waiting for confirmation can make a huge difference in your results over time. Now, while we continue observing the chart, this is a good moment to talk about something that every trader should understand. You have probably heard the statistic that about 95% of traders lose money in the financial markets. Many people hear this number and feel discouraged, but the truth is that this statistic exists for very clear reasons. Most traders lose money because they enter the market without a structured plan. They open trades based on emotions instead of analysis. They overtrade, which means they take too many positions without waiting for high probability setups. They also ignore risk management, which is one of the most important elements of professional trading. Another common problem is impatience. Many traders feel like they need to make money quickly, so they chase the market. They jump into trades that are not part of their strategy, and when the market moves against them, they panic. Fear and greed start controlling their decisions, and once emotions take control, it becomes very difficult to maintain consistency. The small percentage of traders who succeed approach the market in a completely different way. Instead of chasing every movement, they focus on quality over quantity. They wait for the clearest setups. They follow a structured process of analysis, and they always manage risk carefully. Professional traders understand that not every trade will be a winner, but they also understand that consistency comes from following a strategy over a long period of time. Now, if we go back to the chart, we can see that the price is slowly approaching the level that we were observing earlier. This is exactly the type of moment where patience becomes extremely valuable. Instead of jumping into the market immediately, we want to see how price reacts to this area. Does the market show rejection? Do we see signs that buyers or sellers are defending the level? These small details often provide the confirmation that traders need before entering a position. Something else that many people notice when looking at my charts is that I prefer to trade without indicators. This might seem unusual for beginners because many trading platforms offer dozens of indicators that promise to predict market movements. But the reality is that indicators are simply calculations based on price. They are tools that interpret what price has already done. Price itself already contains all the information we need. That is why many experienced traders prefer focusing on price action, support and resistance, and market structure. These concepts are simple, but they reflect the real interaction between buyers and sellers in the market. Markets move in waves. Price never moves in a perfectly straight line. Instead, we see cycles of expansion and correction, impulse and retracement. Understanding this rhythm helps traders identify moments where the probability of a continuation becomes higher. The break and retest strategy works well because it aligns with this natural rhythm of the market. Now, while we continue observing the chart and waiting for the market to reveal its next move, I also want to remind you that if you want to receive alerts whenever I take high-probability trades in the market, you can also join the VIP group through the link in the description. Inside that group, I share my analysis behind each setup and notify members whenever I enter a trade. On average, there are at least 6 alerts per week, and many traders find it very helpful to see how a structured approach to the market works in practice. Now, let's talk about another key element of trading success, which is discipline. Many people believe that the secret to trading is finding the perfect strategy, but in reality, discipline is often more important than the strategy itself. Even the best strategy will fail if the trader cannot follow the rules consistently. Discipline means waiting for your setup. Discipline means respecting your risk management rules. Discipline also means accepting losses when they happen, because losses are a natural part of trading. Every professional trader experiences losing trades. What separates profitable traders from losing traders is how they manage those losses. Professional traders keep their losses small and controlled. They understand that trading is a game of probabilities, not certainty. Over time, a series of disciplined decisions can produce consistent results, even if some trades do not work out. As we continue watching the market, remember that opportunities appear every day in trading. The market will always provide new setups, new movements, and new possibilities. The key is not to rush. The key is to wait for the right opportunity and execute the plan with patience and confidence. If you focus on improving your analysis, controlling your emotions, and following a disciplined process, you will already be doing what the top 5% of traders do differently. They are not necessarily smarter than everyone else. They simply respect the process, stay patient, and execute their strategy consistently over time. If you enjoyed this live trading session and you want to see more content like this, make sure to like the video and subscribe to the channel. And remember, if you want to follow my trades more closely and receive alerts whenever I identify strong setups in the market, you can also join the VIP group through the link in the description. Thank you for spending this time with me, and I hope this session helped you understand the market a little better. Stay patient, stay disciplined, keep learning, and I'll see you in the next trading session.